The ICT Turtle Soup Strategy is an amazing ICT strategy that has an extremely high win rate and extremely high risk to reward. However, it's quite confusing for a lot of traders. So in this video, I'm going to be breaking down what is Turtle Soup, how you can trade Turtle Soup, what pairs and times does it form on, and how to get entries on the Turtle Soup. So I'm going to give you guys a step-by-step breakdown on everything you need to know for the Turtle Soup. So let's get into it. Before we learn to trade Turtle Soup, let's find out where the strange name of Turtle Soup comes from. So, in 1983, there was a famous group of traders called the Turtle Traders, and basically these were breakout traders, so they trade on breakouts. If you don't know what it means to trade on a breakout, say we have resistance here, we have resistance marked out here, and market breaks that resistance. We want to trade as soon as market breaks that resistance, we want to place a buy to try catch market breaking out of this structure. So, that's what breakout traders are. So, market would often do a false run. This means market would often have a fake out here and then it would reverse quickly in order to stop out any turtle traders that were trading breakouts. So ICT eventually called this Turtle Soup, as these turtle traders trading on a breakout would often take losses from the strategy, and soup I guess comes from them taking losses. I don't know. However, that's not what is important. What is important is how we apply it into Forex. So Turtle Soup is selling above key levels or buying below key levels. And what do I mean by key levels? I mean key liquidity levels. So for example, in this example I have here, we have support right here, and we want to buy below this key liquidity level. So, or if it is a selling scenario, we'd have our resistance marked out, or any other key liquidity level such as previous day high, day low. I'll have it listed later on in the slideshow. So selling above key levels. So once market breaks out here, we want to sell here in order to quickly catch the reversal. Some may just say this is inducement. If you don't know what inducement is a institutional strategy where institutions would try to tempt early buyers or sellers in the market in order to take them out, use them as liquidity before market moves in the desired direction. So traders who may have bought at these points right here on this support, they would get stopped out, their stop loss would get triggered. This is what we call taking out liquidity before market continues in its desired direction. So times and pairs for Turtle Soup. Now, it doesn't really have any specific pairs or times that you should be trading. However, from my back testing, and what I recommend is you only trade the New York session and London session for this strategy. And for pairs, you can trade any of the major Forex pairs. That's what I back tested, and it works on most of them. For indices, you could trade NAS 100 or SPX 500. From my back testing, these also do work. So moving on, I will summarize the Turtle Soup in 5 simple steps, starting off with our liquidity sweep. So we want to wait for liquidity sweep above a key liquidity level. So right here, we have relative highs, equal highs, whatever you want to call it. These are relative highs to me. And we see market has taken out these equal relative highs, whatever you want to call them, and have your key liquidity levels right here. You can go read through them on yourself. You can pause the video right here, read through them. These are all key liquidity levels which will be valid for Turtle Soup. So moving on, this strategy only works if we have more confidence for our entry, as market could be going for 20-30 pips up, sweeping liquidity before reversing. So we want to have some sort of confluence for our reversal, such as an order block or fair value gap. Right here in our example, we have an order block, which I took this trade off of. So market has entered into our order block, but however, we would not enter off the zone that is too big. I can't remember exactly how big this zone was, but I think it was 40-50 pips, which is way too large. So we want to wait for some lower time frame confirmations. So that takes us on to step 3. For our lower time frame confirmation, we want to wait for a reversal pattern such as change of character or market structure shift to try to catch that reversal. So we've had a first market structure shift right here. This market structure shift is valid as this candle has closed below this candle with displacement, and we've left a fair value gap right here. However, I did not enter off this, and we've had another market structure shift right here as this candle is closed below this low, making this market structure shift valid, and we have another fair value gap right here. So I took the most premium level of imbalance right here. I've marked it out, and simply you just want to wait for market to enter off your zone. And a little tip with fair value gaps, you want to enter off the 50% zone. For order blocks, you just want to refine them. For fair value gaps, enter off the 50% zone. This decreases your drawdown, your risk. market will almost always hit the 50% zone of your fair value gap. So moving on to step 4, our entry. So as I said, for fair value gaps, enter off the 50% mark, and order blocks, enter off refined order blocks. This is how you catch sniper entries. So as you see right here, I've entered off my 50% mark and I catch the sniper entry right here. Now we just wait. We can even just sit back. Another tip, guys, do not enter your trades manually. Always use sell limit, buy limit, as this is how you avoid emotions in your trading. The more automated your trading is, the less emotions are in it. You don't want to be adjusting your stop loss, adjusting your take profit based on your emotions. Emotions is a big reason why traders fail in the markets today. So just place your limits and walk away. So I placed my sell limit right here. Not only did the market tap me in perfectly and I got the best possible entry at this price, as if I were to use an instant execution in the market, I would not have gotten such a good entry, as I'd have to be on charts consistently. So simply place your stops and just walk away. If you really struggle with your emotions, you could just really not watch the trade. If you're dying to, you could check. However, I do not recommend it. Just let your trade play out. Do not adjust anything. Do not change anything. The more emotions you have in your trades, the more likely you are to fail. So moving on to step 5. This is our favorite step. Just wait for the money to flow in. As I told you guys in the intro, this is our money printer. The way the strategy works is like magic. So as you can see, this trade was absolutely amazing. I forgot the risk to reward on it, but I'll show you on the trading view later. And with all that said, it's time to move on to market examples. So I'm going to show you guys a few examples of the turtle soup in the real market on trading view. So let's get into it. All right, guys, I'm on EURUSD on the 15-minute. I'm going to be breaking down this trade for you, how I use the turtle soup to catch a nice 1 to 8, 1 to 10, and 1 to 14, I think it was, on partials. So firstly, we've had our step 1, which is our liquidity sweep. As you can see here, market has taken out this key level of liquidity. This is the week low. So I'm going to mark that, guys, for you guys. Now, once market has taken our liquidity, we want to wait for a reversal pattern, such as a market structure shift or a change of character. So we do get that right here. This is our change of character. As you can see, we have higher lows, higher lows, higher lows, higher lows, then boom, we get this change in momentum right here. You can see market going down, down, down. We begin to change in momentum. This is our change of character right here. Let me mark that out for you guys. So we get a change of character. And what else I spotted is the market left a lovely area of demand right here. This demand is valid 1. We've left a nice imbalance right here, which market would presumably come back and fill. Secondly, we have no mitigation back into our zone. Thirdly, we've broken structure above this high, this high, this high, this high, this high. We've broken many structures, so this just makes the zone valid. And now this has just gave me a confirmed lower time frame entry. I'll be putting my stop loss right below the low. And for partials, I would be firstly targeting this pair of equal highs right here. And by here, most of my position would have been gone. I would partial out most of my position by here. Second, take profit. You could target this high right here. And third, if you're feeling very adventurous, you could target this high right here. So let's let market play out and let's see what it does. Now market does smash through our take profit 1 for a 1 to 8 and second take profit for our 1 to 13. However, we do miss our third take profit by literally 1 pip. Now this is Forex, guys. This is why we partial. As not everything goes our way. Sometimes nothing is guaranteed. Nothing is 100%. However, you would have walked away from this trade with profit. So let's move on. Okay, I'm here with another example on GBP USD. I'm on the 15-minute again. And I just want to show you guys how often it does form. You could have caught it right here. However, I'm not going to go through that one. and this was the one from the slideshow. However, I'm going to show you guys how it just recently happened right now. As you can see, we have equal lows right here. Market is taking them out, and we do get fair value gap right here, which market does respect. As you can see, market perfectly taps into it. Now if we dropped onto a low time frame like the 1 minute, now on the 1 minute we do get a nice area of demand right here. If you could have entered off and place your stop loss below this low right here. Your first target could be here. We're just gonna have to see what market does. Make sure you guys always risk appropriately. Second take profit could be at these highs right here. It's all down to your guys' risk management and your risk management strategies. So that's all for today's vid. Thank you guys so much for watching. If you have any questions as usual, just leave them down in the description, and I'll see you guys next time.